And to analyze the implication of these tariffs and their potential fallouts, we are joined by Justin Thomas Russel, Executive Director of the Global Foreign Policy Center of Washington. Good evening to you, Mr. Russel, and welcome to Qnews. And let me here ask you, these tariffs have been described as one of the biggest shifts in the U.S. trade policy in years. What is the economic rationale behind this decision?
Well, first of all, thank you for having me as always. The rationale is that this is part of Donald Trump's America First policy. Donald Trump, in his mind, and according to his advisors, feels that the U.S. is unfairly targeted in international trade. U.S. supplied products such as cars, such as U.S.-made electronics, heavy goods such as appliances. They are taxed unfairly when they go overseas, and we don't retaliate. That's according to his mind. The reality is that this is a very dangerous trade war, not just for the U.S. economy, but for the global economy as a whole.
Now, from your point of view, Canada and Mexico are two of the largest trading partners of the United States. How will these tariffs impact North American trade and economic relations?
Well, when it affects trade in a great deal, again, as you pointed out, these are the two biggest trading partners, or two of the biggest trading partners that the U.S. has. The cross-border trading has, created free trade zones and free trade agreements between the three countries, including one that was done by Donald Trump, which he says is incredibly successful. The problem is that now that we are getting into a tariff trade war, we've seen President Sheinbaum in Mexico and Prime Minister Trudeau in Canada say that they're going to retaliate with similar 25% tariffs on American products. This creates a continental trade war, which none of the economies can handle. We're going to be paying more for products coming from Canada, such as wood, aluminum, iron and steel-made appliances that are made there. Even our cars, our trucks, a lot of the components are made in both Mexico and Canada. So those prices are going to come down to the manufacturers here in the United States, and those prices are going to be passed on to consumers. That's the key here. Trump is making it sound like the trading countries that we're involved with are going to be paying these tariffs. The reality is everybody knows that the consumers are going to hold the brunt of these tariffs, and that means higher prices for U.S. citizens in the U.S. economy.
Now, speaking here, or you respectively spoke about a larger war, you even spoke about a continental trade war. What could be the scope of such a war?
Well, the scope is, if we are getting into a continental trade war, for example, a majority of the Canadians live within driving distance of the U.S. border. In places like, Ontario, in places like Quebec, a lot of the Canadians will cross the border and go shopping in the United States for various products. The reality is if they start coming over to the U.S. to go to a Costco, let's say, and they go back to the border to cross back home, and they're hit with a 25% tariff on a $400 food bill, that's going to be very costly to them. That's going to prevent them from engaging in commerce in the U.S. that they would normally do. On the broader scale, what we're looking at is the fact that, if we are starting to create a situation, because we have had such a close trade relationship, when we talk about the components of cars being built in either Mexico or in Canada, and them being shipped and tariffed before they're put into full production on the line for cars and trucks built in the United States, that's going to cause the cost of cars to go up. That means that not many people are going to be buying new cars, which means that we're going to start seeing job losses in industry that Donald Trump said he swore to protect. That's the U.S. auto workers. So global implications that could have.
That brings us to China. And the 10% tariff on the Chinese good is definitely lower than the 25 rate of that of Canada and Mexico. Now, from your point of view, does this signal a shift in the US economic strategy towards China? Or what are we expecting here towards China?
Well, in my opinion, Donald Trump and the Trump administration is playing a very dangerous game of economic chicken, as we would say here in the United States. What's happening here is that we have become, as a nation and as a national economy here in the United States, so reliant on just-in-time logistics, and we, quite frankly, have become entitled and somewhat spoiled with the low prices by products that we import from China. Everything from cheap flat screen TVs to cheap clothing to cheap food products, etc. The reliance on the Chinese products here in the U.S. economy to keep prices low is remarkable. At the same time, the Chinese economy requires that U.S. market to buy those products. If we start shutting that down, if we stop buying those products, because now instead of paying $300 for a big screen TV, we now have to pay close to $800 for a big screen TV. That's going to be a problem for the Chinese economy, and then they start losing production capabilities. They start losing market share in the West. It becomes a ripple effect on the global economy from there, because if the Chinese aren't shipping out or spending money that they're creating through the trade with the U.S., and the U.S. market can't afford to buy new products, this becomes a global economic problem that ripples out to all our allies and the allies of the Chinese economy.
But you spoke about how would that reflect on the industries such as the automotive, the agriculture, and the retail, definitely. Now, these are all expected to bear the brunt of higher costs. Now, how will that affect the American businesses and consumers? And how will the Americans deal with this?
Well, it's going to affect the American economy and all Americans in the one place that Americans voted in this past election in November of 2024. That's in the pocketbook. Look, nobody said that Donald Trump was the greatest, most stand-up guy in the country that we could elect president. These were people that were voting on their pocketbook, on the economics. The inflation had risen under Joe Biden. It had started coming down, but prices were still up for simple products like eggs and butter and milk. They vote with their pocketbook here in the United States. The problem that Donald Trump is kind of playing a little bit of a game here, it's almost like a duel, is the fact that, when he said he's going to make America great again and make the American economy strong again, if prices go up and people can't afford the products that they couldn't afford under the Biden administration, and even more so under the second Trump administration, that could be very politically harmful for him, and he's going to lose the trust of many of the swing voters in the United States that might have swung Donald Trump's way because they believed his approach to trade and the economy was much better than the Democrats and Kamala Harris.
Right. That was Mr. Russel. We thank you so much for those analysis.